Hello everyone, welcome to another video where today we're going to be covering the topic, is it the right time to invest? Now, what I mean by is it the right time to invest, I'm talking about investing in stocks or equity. Whenever we talk about investing in equity, you have to look at the graph. So here I'm looking at from a perspective of 1 year. If I put my money during the period of July, I should be expected to gain at least 9% return. Now, why is investing in stocks better than putting your savings into a bank? Because if you put your money in the bank, the average interest rate return that you would get on your savings account would be around 1 to 2%. Compared to that, if you can time it right, you're definitely able to gain a lot more investing in the market. So, investing in the market is a talent, right? Now, I am a professional accountant, okay? So, I have very good knowledge about what a financial statement of a company looks like, what is business performance, is it sustainable performance, is it long-term, or is it just temporary accounting manipulation or window dressing, which happens a lot. So a lot of times when you invest in a company, you see that the quarterly earnings are really good, but then in the next quarterly earning report, it completely dies down. So here, when you're looking at long-term investing, okay, you can definitely see that long-term you're supposed to make money, okay? But the picture that you don't see from this is that in the long term, a lot of companies do die out and there's a lot of bankruptcies, okay? So this index over here just shows the surviving companies. It does not show the bankruptcies. However, you'll notice that certain periods of time, there's a 58% dip, okay? There's another 34% dip. You need to understand that if you keep your money in constantly, right, you're supposed to, overall, you're not going to make return. Now, this is not my words. This is just research analysis and research findings that if you're investing in a market and if you're not taking it out for periods of time, then you are going to lose from that as well. So, first advice would be, first of all, look at the time frame in which you're investing, say year basis. In the year 2021, if you stayed out of the stock market, you actually made money. Because in the year 2022, let me rephrase that. If you stayed out during the year 2022, you basically made money. Because 22 was a horrible year for investing. It was horrible. And it started off with the war in Russia and Ukraine. As soon as that war started, you guys gotta know that, a bad event like that, a global event like that is just gonna cause problems in the market. And it did cause problems in the market. And the sentiment for the market has become horrible since then. But since November, I can see that there's been a change in the trend, all right? November has been really good. November has been a fantastic month for all kinds of, investment. And I will try to talk about what are the 3 reasons why these things happen. So let's talk about, what happened in November. So in November, I would say, first of all, I would like to look at the monetary policy, okay? So monetary policy is basically the interest rates set on, borrowing money, right? So if it's cheaper to borrow money, right? If the interest rate falls from, say, 1% is slashed to 0.5%, you are motivated to take out more money, right? If you're motivated to take out more money, right, you're going to invest some of it. So monetary policy where there is a lower percentage for interest rates, right? We call that expansionary monetary policy. But it's like a good monetary policy, okay? So if this happens, if the rates are slashed, just automatically know that the markets are gonna go up, right? Now, during this year, what you noticed was the monetary policy kept being hiked by the Federal Reserve. Okay, so before the cost was 0.5% to borrow, and then they keep increasing it by 75 basis points. 75 basis points means they turned it into, say, 1.25%. Okay, so this is like, basis point means like 100 basis points is like 1%. So they increased that to 1.25%. Okay, over here. Now, if it becomes more expensive to borrow money, some people are going to stay out of the market. Okay, that's why this creates a negative trend in the equity market. Now, another thing you gotta know is that during election years, right? So say, for example, the next election year is going to be 2024. During that year, the New York Stock Exchange will do really well because the sitting president will try to make sure that the markets perform well so that he can win re-election. All right. So expect that during 2024, it's going to be a fantastic year for investment, right? So now I'm going to talk about why November seems to be good. Now, the other thing is, like, you cannot fight the market, all right? If the market is telling you that you need to invest, then you got to go with it. You cannot argue with the market. You cannot say that, oh, yeah, I'm more qualified, I have more knowledge, and I'm going to invest more, okay? So you cannot say these things because if the market is going to go one way, you got to follow with the market, and you can't fight the market, right? Now, I'm just going to show some sort of fashion stocks. Let's see if, Yahoo has some fashion stock list up there. So I'm going to just show lists from, okay, so Lululemon or Lulu Fashion. I think Lululemon is one of the shares that I like. So, this is Lulu's Fashion Lounge Holdings. Let's just try Lululemon. Okay, so Lululemon Athletica. Now, this is a fashion stock, all right? So they make athletic wear. And you can see that in the recent 1 month, okay, they've done really well. They've gone up like around 30%, I think. They've gone up from 319 to 385. I do believe that fashion stocks are going to do really well. And I'm going to make a separate video on that, okay? Another stock that I really like is American Airlines. I feel like American Airlines is too big to fail. American Airlines is one of the largest companies in the world. And I do believe that since COVID, this company has not been able to recover its value. So let's look at a 5-year chart. So before COVID, right? Before COVID, like let's look at, we're not going to look that long term, but let's look at this. Stable from 2014 to 2019, it had been stable around, say, $20 to $30, okay? And since COVID, January began, it's dipped down to, say, below $15, like at 13. It recovered back to 21, but again, it's been dying down. Now, dying down because I would say that oil prices have risen up. So oil prices have risen up. So like airlines, transportation, their cost of sales definitely has increased. They cannot increase the price of ticketing to their customers. So they're going to bear the brunt of the, increase in prices. Because it's not so easy to pass on the increase in costs so easily to your customers, right? So can you see over here, like definitely they're struggling, and there's a reason why they're struggling. They're going to struggle when oil prices are really up. But I do believe that oil prices are starting to trend downward. So if you look at Brent crude oil price, so let's see Brent crude oil price, you'll see that the chart has been going down for a while now, okay? So let's just look at Market Watch. Brent crude oil. I'm just going to use a 1-year price data. And you can see that during 2021, $73 a barrel. It's gone up to $122 a barrel, which is a lot. I think that's like a 50-60% increase. And then it's been dying down to, again, 84, 85. And I do believe that eventually it's going to come down to $60 because oil prices are just super inflated through, wars and all that kind of artificial stuff, right? This is like the height of the pandemic. That's why it's showing that. Let's see if there's any longer graph. So can you see over here stable? Yeah, like 2000, like this is before US started like producing energy. I think when US invaded, like US started like with their shale oil, when they ramped up production, like, it definitely went down. But like since 2014, like it's been dying down, $40, $50 a barrel. This is where I believe is the new price. because I feel that global supply has increased a lot, and this is the stable supply. Now, why am I talking about all this? The reason why I'm talking about this is because I believe that American Airlines is a safe long-term investment. Okay, so to wrap this video up, I'm going to just summarize what I've talked about. Basically, I've talked about what are the indicators of a market, what do you look at in a market, whether you should invest long-term or not. And then I looked at two stocks. One, I looked at to show you that, like I feel that, markets have been doing well during November. Because even American Airlines, let's just check at 1 month graph. Now, American Airlines had a stable month. It didn't improve that much. But if you look at October onwards, definitely it's been like it climbed and then it's been holding it. All right. So, yeah, but airline stocks are definitely a lot slower, a lot better. But long term, this is going to hit 20 again, like for sure. It's not that bad. Another one that I believe does well is Kering. So let's just look at Kering before I wrap this video up. Okay, so can you see over here, November, fashion stocks just killed it during November. Oof, this was amazing. But yeah, of course, if you look at 1 year, you'd be down a lot, right? So that's why, like, whenever there's an indicator that, the market's heading downwards, you gotta know when to get out. And knowing when to get out is the most important thing in, like, investing. This is what I've learned. Like, you cannot constantly invest. You gotta take your bets. It's like when you're betting, okay? Market is kind of like speculating because you are speculating. And you gotta know when to speculate and when to invest, okay? So you gotta look for what are the indicators that, like look at like interest rates, cost of borrowing money, look at price for oil, and generally do 2-3 factors, just align them and see that if they have historic correlation with how stocks perform. Pick an industry that you have good knowledge about and then go about it. So I'm gonna wrap this video up, and next video I'm gonna go through, say, the analysis for Apple. I think that will be a really good video. Thank you. Bye.